right, I'm going to guess that sound's working. All right, I'm just waiting on feeds to catch up, and then we'll get started. Sounds good. All right, thank you, Randall. All right, we'll get going then. Hello, everybody. Let me try that again. Hello, everyone. Today is Thursday, March 5th, 2026, and this is the week in charts. Obviously, I want to thank all you guys and girls for attending. I appreciate taking time out of your busy schedule to be here. I do a poor job of getting the word out. I realize that still. But the shows are on Thursdays at 11 Central, 12 Eastern. Anyway, thanks again. What are we going to talk about? Well, current market conditions. I have a tremendous amount to say about that. I know I always say that, but this week I really mean it. Your questions on trading, just go ahead and punch them in whenever you're ready. Your favorite stock and crypto picks. And we're going to focus again on the missing piece, and that's to see an actual trader make trades, telling you what he's going to do, then doing it, and then showing the results, the outcome, warts and all. There's all my contact information. We'll revisit that in just 1 second. And then we're going to resume and finish the 26 trading resolutions for 2026. That was a disclaimer screen. As you know, you can lose money trading, or as I often sum it up, all predictions are about the future, and a lot of stuff could happen between now and then. There's all my contact information. Once again, feel free to shoot a screenshot. You can also reach me at dave@davelandry.com. All right, as I've said ad nauseum since I've been showing the methodology in action, is the missing piece for me, and I think for any trader, is to see another trader recommend something, take his recommendation, and then let the chips fall where they may. And as I've said a million times, I was very fortunate early in my career to be able to work with some traders doing some programming and then eventually some stock picking and things of that nature. And it allowed me to kind of get an inside view of what happens behind the curtain from a successful trader, and that meant a lot to me. And his methodology was much different than mine, but I was able to see that it can be done and it does work, and the ups and downs are very normal. And I think that was the biggest piece, is being able to see those ups and downs. And lately we've been going through open profit drawdowns quite often here, and the equity swings have been brutal. I'll come back to that in 1 second. And yeah, I mean, I dropped a couple F-bombs this morning already, and you know, as I said before, I insulated my office very poorly, I might add, because I knew I would be dropping F-bombs in here. The old place, we had a little guest house off to the side, and I was able to do what I wanted over there. This is a little different here, but I haven't quieted down much. Anyway, I did want to show this. The VIX only matters when it matters, and sometimes I actually forget to look at my own stuff, and that needs to be one of the million little things, or one of the resolutions or whatever. And that's a great thing about being a public figure and having my educational business and by whatever you want to call this trading service. I guess it's just more education, right? But having that forces me to think about, okay, what can I talk about? What can I write about? What could I do? And doing such, it reminds me, as I often say, the VIX only matters when it matters, and it's something I don't pay a lot of attention to on a day-by-day basis. As long as it's chopping around the moving average, it doesn't really matter, okay? But when it gets stretched, that's when it gets important. And I was blessed because I was able to work with Larry Connis early on doing programming and research, and he taught me a lot about the VIX, and he explained to me that it's a reversion to the mean type of market, and then when it gets stretched, it tends to overshoot in the opposite direction. So I took his words quite literally, mean being a moving average, and I started doing a lot of research based on the 10-day simple moving average around the VIX, and I came up with a few systems based on that. By the way, when it comes to the VIX stuff or any short-term stuff for that matter, short-term trading, at least pure short-term trading, I don't think works, okay? And I know I'm slotted as a swing trader, but you'll see some of these positions in a few minutes we've had open since April. I believe that you must have some sort of way to make potentially unlimited gains. Otherwise, you're not going to survive the frictional costs and the occasional spanking that you will get. Now, it takes time for big moves to develop, but also sizable moves can go against you. So it's very asymmetrical when it comes to the risk. The short-term risk can be huge, okay? And it takes a long time, as a general statement, for the gains to materialize. So it's very asymmetrical. Something bad can still happen to you over the short term. A stock, you can come in, a stock could be halved overnight. I've seen it happen with the Landry 100 a few times recently, and believe me, it's happened to me before. You get at a stock on Monday, you come in on Tuesday, and it's halved. You know, might as well demonetize now. Shit happens, right? Anyway, with the VIX, I like to look at the moving average, the relationships to the moving averages. So this is a tweet I put out a couple days ago before I took a trade in the SVXY, and you can check that out here. Oh, follow me on Twitter is T Following Moron, at T Following Moron, Trend Following Moron. But it wouldn't let me have a label that big, so it's T Following Moron. Anyway, so you could come in here and see this green line is the S&P 500 on a closing basis. The, I don't know what color that is, violet maybe, or magenta line is the 10-day simple moving average, and down below is a relationship of the close, and I think this might be the low relative to the moving average. And I have another, if we have time, I'll show you this chart live and possibly a slightly better version of it. But anyway, when you have these spikes in the VIX is a volatility index. It's a measurement of the fear or complacency, depending on which side the VIX is on its moving average relative to its moving average. And it's the VIX is a hypothetical number that's created by looking at I don't know what you would call it because it's always 30 days, but a 30-day, perpetual 30-day, I think it's a way of describing options, both puts and calls, okay? So the implied volatility, what the market is implying, the option is suggesting, okay, the volatility it's suggesting gets just really out of whack. And a couple of days ago, we had the crash or whatever you want to call that move. Options were so ridiculously expensive. I wouldn't do it personally, but if you were a seller of options, you would certainly get a lot more money for those options than you would get on Monday. I recently met someone and they were telling me that they sell their entire portfolio into covered puts on Monday, and then I guess they manage it throughout the week. And I'd be willing to bet that if he did that on Tuesday versus Monday, his results for the week are going to be vastly different. And by the way, I don't recommend that type of trading, but that's another story altogether. If it works for him, that's fine. You just have to know the gotchas in anything you do, but I don't want to digress too far. Anyway, when this VIX gets really stretched, and I want to circle back to why I was saying the short-term thing. So my systems that are developed in the, I guess it was late 90s on the VIX, were based on a several-day time period. They were short-term trading systems. And since then, as I just alluded to, I've discovered that really short-term stuff doesn't work. And one way I figured that out, well, I knew it to begin with, but one way was a while back, and this was a couple years ago. If you go in and watch all the old weekly charts, you can't sleep at night, check them out. And one thing I learned was, in looking at those old weekly charts, or there was a period of time where the VIX was doing incredibly well. It absolutely printed money on these short-term systems. However, this thing called COVID-19 came along and pretty much decimated those results for a while, okay? So that's the point I was making about short-term trading. So if you're going to do something with the VIX here, it's okay to have it as kind of like a backing your research, okay? But if you're going to actually trade it, I would recommend you only trade it intraday. I'm not a big fan of day trading, although I do a little bit too much of it. But I think that you could take something like this, and when that VIX is really, really, really stretched, look to go the opposite way, or possibly look to buy on a reversal, of course, something like S&P futures or SPXL, or whatever the case may be, whatever instrument you feel would work the best. But anyway, so long story in, the point I'm trying to get to here is the VIX was really stretched due to revert back to the mean. And sometimes I forget to look at this, and this is why this is why I like having the educational business. It forces me to do these things. This is my commitment device. And as I often recommend, and it's one of the resolutions, make sure you have some sort of commitment device, and make sure you're doing your homework, and make sure you're paying attention to all of these things. Anyway, long story endless. This is the actual trade. Now, I did take this in more than one account. In my model account, my model account is the account where I mimic my trading service, okay? I try to keep the trading outside of the trading service fairly small there, so it doesn't have a huge impact on the equity, and I have a pretty good feel for what's going on with the trading service. But anyway, I did take this across multiple accounts, and I did go a little heavier in other accounts. But any type of intraday stuff, I would recommend you almost trade at a size that's nearly meaningless, and your life is going to get a lot better. But anyway, those are the actual trades there below. I was looking for 1 point in this, and I got out a little early, and shame on me because I didn't take good records, but from memory, I remember this is a 30-minute chart here. So even though it looks good, I remember that it was right almost to the IPT, and it started backing off. And that's why I decided to go ahead and lock in the half of the shares, okay, at a profit. And then by the time I did that, the market came back, thank goodness, and then my stops at break even. So let me just back up a second. When I take an intraday trade like this, okay, 200 shares, keep the math easy. I'll put on 200 shares, in this case, looking for a point. I'll put in a 1 point limit order and a 1 point trailing stop order. But Dave, that's 1-to-1. It has a negative expectancy. Okay, settle down, Beavis. Yeah, it does if you don't allow for the potential for unlimited gains, and that's what we're doing on the second loaf. In this case, it turned out okay, all right? It didn't set the world on fire, but it's better than a poke in the eye, right? So what happens is once you hit that IPT, your trailing stop is doing this, okay? Kind of like the little man in Price is Right, just kind of going up with the price. And once you're at your IPT, you're now break even with your stop, okay? And then you can sit back and relax. I know, but try to be a little bit more hands off. Now, I do need to check the trades and other accounts in this. I do have a tendency to be a little bit more of a micromanager, which I probably shouldn't do. But sometimes with this, especially like lately with this market, you have to be really careful. It's like if you're looking for 1 point and you just can't quite get there, maybe it's okay to take it a little bit early. Whereas if it's a market's blowing and going, you could let it go past 1 point and let it just keep going. Anyway, so sold half there, a little less than 1 point on that, and then a little bit more than 1 point on the close. So overall, a couple $100, much better than a poke in the eye. I know it's fuzzy math, but if you did that every day, that's an extra 50-something K a year. So much better than a poke in the eye. Anyway, I just wanted to show you that I am paying attention to these type of things like the VIX. They only matter when it matters, but it pays to pay attention. Now, as I've been saying quite a bit, what's not in the brochure when these gurus are telling you how much money you can make trading is that all trend trades eventually end badly. And by the way, the only way to make money trading is to capture the trend. You have to buy lower than you sell, okay? I'm not trying to say buy low, sell high. That's a loser's game because something is low, as I often preach, it's always darkest right before it gets more dark. Bitcoin was at 80 or 90, or forget where it was, but close to 100K and was dropping like a stone. And people were asking me about bottom fishing there, not so much my peeps, but people in the gym, for instance. and I explained to them this darkness thing, and then I actually put out a tweet on that. So you can go in and look at my Twitter feed and see when I put that out, or X feed, I guess. But anyway, all trades eventually end badly. You're either going to outright lose, or you're going to give up some profits in the end. And the open profit drawdowns are a pain in the butt, but it comes with the territory. If you sign up to be a trader, guess what? You're going to have open profit drawdowns. It's actually a good problem to have if you think about it, okay? So you're up 10 and you end up only making 8. Well, $8,000 is better than a poke in the eye. As I've said a million times, anybody's ever bitched about the open profit drawdowns, and one of my recommendations, I tell them, look, send me that $8,000 or whatever you make, okay? Keep a couple hundred out, go get you a little massage, and I want you to just completely forget about that trade like it never happened. In 20-something years of doing this publicly, no one has ever sent me a check for their profits because they were upset about giving up some profits in the end. Anyway, as I said a second ago, and I'm almost going to use the word hope. I guess I could. Hopefully, we don't stop out. But as I said a second ago, you have to position yourself for longer term gains, okay? Unlimited gains. So this is the TFPM that triggered way back in May. We banked 964. That ideally that's 1,000, okay? But based on the entry, I think I had a little bit of a gap entry and I didn't adjust the parameters after that. I'd kind of leave them alone unless it's something really major. So better than poke in the eye, and I think there might have been a dividend or something in here. Anyway, if the market stopped out, okay, and this, my little arrow's off here, but at right here, we had 67.96 open, okay? And if this slide happened and or continued, I should say, and we got knocked out, you will lose $3,400 and change, okay? And only make $3,300. So you're giving up essentially half your profits. That sucks, okay? Don't get me wrong. But it's much better than a poke in the eye. And then, of course, these numbers are changing fast due to the volatility of the market. But when I took the screen capture a couple days ago or yesterday, you had 64.07 open. KGC, same sort of action there. And by the way, this made for many dead money examples. I think if you truly knew it was dead money, meaning that it has no chance of any further improvement or marginal improvement at best, then yeah, by all means get out. You don't know that, okay? You don't know that. Anyway, it took forever to hit the IPT, eventually did, and last month we had 12,025 open. It has since drawn down a little bit, and you would only make 71.50 if it hits this stop, which is a whopping $5,000 loss. Now, keep in mind, we take off half the shares at the IPT to help mitigate some of these longer term swings. But when you're fortunate enough to get in at, what is it, 15, 16 bucks a share, and it runs at 30 something bucks a share, okay, you've got 100% profit or whatever. So those swings are still going to be big, and they're going to be painful, obviously, but you just have to learn to live with them. And believe me, I'm a very, very emotional guy. As I said many times, if I'm forced to watch a Nicholas Sparks movie, or I willingly watch a Formula One documentary, which they usually end badly, by the way. I'll cry like a schoolgirl. I'm just a very emotional type of guy. Probably too emotional to be a trader, but I recognize this trait of mine and I deal with it, okay? So you can see we've given up some of those profits based on this mark to market, 96.15 open as opposed to 12.25 at its high, 12.225 at its high. Okay, MDLN, this was a former mystery chart. Mystery chart is a chart directly from my trading service, and I show it here without the name, of course, for everyone to see that, hey, this is what I'm recommending, and let's see how it shakes out. Anyway, nice first deep retracement in an IPO, one of my favorite patterns. Here's parameters down below. Entry is here, stop is here, and initial profit target is up here. Let's see what happens. It triggers an entry. Takes its, I wouldn't say it takes its sweet time. It takes a few weeks, a couple of weeks to get to the IPT, but it did. So we bank $1,000 and then we trail the stop higher on the remainder. Now remember, once you bank your first half, it's $1,000 per 100K, all right? Once you bank your first half, your stop needs to come to break even on the remainder. And in this case, I think my scaling is a little off on my stop. So on this day here, just in case you're wondering, this stop needs to be a little higher. I noticed this when I was going live. But anyway, it recently stopped out for a $231 gain on the remainder. So $1,231 over a relatively short period of time, 5 or 6 weeks, okay? That's a decent return. Not that this is all we want. We want those KGCs and TFPMs and AXTIs and all the other ones I'm going to show you today, because that's where the real money is, right? But if you could make a little money in the meantime in some of these other stocks, that's great. And there was someone who posted their theory for trading, and their theory was based on round trips, okay? And if you make enough round trips, enough of these $1,200, you'll make a lot of money. The only problem with that I have is that it appears that he's limited his gains on what he's doing. Now, allegedly, he's been successful doing this, so more power to him. But I think a big part of that is incredible stock selection, because otherwise it's not going to work if you're only making relatively small amount of money per trade. So these swing trades that stop out, okay, swing trades that hit the profit and stop out, are great, but this is not why we are here. We're here to make a lot of money on a stock and ride a trend for hopefully a year or longer, maybe 10. All right, so AXTI, this is not a mystery chart because it triggered in between weekend charts before. I recommended it and it triggered in between the weekend charts. But I showed it the first chance. And if you want to go in and see this without any hindsight whatsoever, you can go to my YouTube channel, youtube.com/Dave Landry, or you can go to the archives page, davelandry.com/archives, and you can see all the old ones there. The newer ones are posted to YouTube. And by the way, if you're, I don't know if you'll, maybe there's translation below if we're on YouTube, but if English is not your first language, and you were thinking about the trading service, one of my clients in Italy asked me if I would start posting to YouTube for him, and I did. And I'll be happy to post it there, or you could join in with that if you're part of the trading service, and just let me know. And then the translation is pretty good, even with my bad coon-ass English. It does a fairly good job. Anyway, so there's your parameters down below on that one. And again, that's based on a 100K account, 2% risk if stopped out. So it triggers an entry, comes back in a little bit for a few days, and then fortunately hits that IPT fairly quickly. So again, you bank 1K per 100K, stop goes to break even. It came dangerously close to the stop, but it didn't stop out. And this is where, again, I'm going to beat the dead horse on money management and not micromanaging. And it's hard to watch a stock go against you day after day after day after day. I got an Instagram a while back, as I've said quite a bit, because we got into one and for 9 days we were underwater. And I'm guessing, I don't want to email him back and rub salt in his wounds, but I'm guessing based on his level of frustration that he probably bailed on the stock the day before it took off. That was glue. Anyway, so we drew down a little bit with this one. I think it's getting whacked again today. Oh, not too bad. It's off a little bit, but on a relative basis, it's doing really well. So you can see we had 25.37 open. Now, one thing I failed to mention earlier is that you're letting that stop widen out, okay? And you're adjusting to the longer term volatility of the stock. If you do this right, the volatility of the stock is going to increase, and the price is going to increase for longs, obviously. And when that price increases, you're going to have to give the stock more room on a point basis. Now, if you're trying to, as I've said many times, you're trying to get into a trade and say, I want to stay into this trade for a whole year. Well, you're going to have such a wide stop, probably 50% or more, to try to hang on to it. So instead, I'm trying to hold on for at least a few days, get my initial profit target out. And once I do that, I'm sort of playing with the market's money, or as Charlie Kirk, the trader, says, free rolling is what he calls my money management when I take those partial profits and get that stop to break even, okay? So the point I'm trying to get to is by letting that stop widen out, yeah, the drawdowns are really painful. In fact, when I was putting together this presentation a few weeks ago, I'm like, oh God, that's $5,000 per 100K. That begins to add up after a while of drawdown. But you have to be willing to stomach that in order to ride out these longer term trends. And yeah, like I just said a minute ago, it's going to end badly. Eventually, that stop is going to get hit, and you're going to give up a sizable portion of those profits. However, if you go back to those longer term stocks that we've been in forever, like KGC and TFPM, you'll notice there have been a lot of little peaks and troughs throughout, and each one of those little drawdowns was substantial. But being up 100% and getting stopped out is a lot better than being up 20%, okay? So it's like, it just comes with the territory. As I said 1,000 times, Richard Dennis in the Turtles program, read the first Market Wizard, I think it's in there, the second Market Wizards. And Dennis was actually, they talked, actually, to learn more about it, read The Way of the Turtle, I think that's the name of it, by Faith, Curtis Faith. He was one of the original Turtles, or one of the Turtles. I think there was just one batch. Anyway, he said that Dennis was really okay with open profit drawdowns because it came with the territory, and he didn't have a problem with that at all. What he did have a problem with is not following the plan. And for instance, there were trades where that should have been taken, and it was a crude oil trade, I think, and all of the turtles except for one got whacked on the trade, and not one of those traders got called in for taking those crude trades because it's what they should have done, right? But the one trader that didn't, and his job was potentially on the line, they wanted to know why he didn't follow the plan. Anyway, I digress a little bit, but Curtis Faith's got some really good books. He's an interesting character. Do a Google on him. I might have to go visit him one day. I don't know what prison he's in, but I digress. I hope he's out, and I hope he's got his life together. Anyway, this is not a mystery chart. This is a silver stock. By the way, this trade was hard to take because silver got whacked, and I was worried that silver could be the top. Okay, it was still a longer term trend, but it got whacked really hard. It was on the, I guess, the cusp is what I'm trying to say, at a bit of an inflection point where it could go either way. But this setup looked great, and I figured it was worth a shot. And it was a hard setup to take. And it was even harder to recommend it, Anyway, because I don't look like an idiot. Nice little pullback to the 30 EMA. That's a Landry light pullback. I put the article on Substack because it's easy to transfer over. I'll eventually get it to my website too. I think it's in the free section of my Substack, so check that out on Landry light pullbacks. I think it's substack.davelandry.com. I can never remember what it is, but it was at the beginning of this presentation. It's my Substack page, and I'll remember that next time. Anyway, a little pullback to the moving average. You can see the Landry light down below goes back to 0. Now, ideally, I say 10 to 20 bars, 20 bars ideally, okay, but sometimes 10 bars if the trend is strong. The other thing to look at too is look back in time, and this is something I covered in the article, and you can see that however many bars this is, probably about, let's say, 31 bars plus another 10 or 12 or 11, whatever the case may be. So it was like Landry light for a long, long time. It had one little tiny kiss right here, and that's it. So that's a pretty good trend. And then also notice it's accelerating higher, which is very important and also very persistent. Okay, somebody just recently asked me on X if I prefer persistent pullbacks over Landry light pullbacks, and my answer was yes, I prefer both. Or what did I say? No, the thing is, and again, not the last week at Bandcamp yet, but as I wrote in the article, what kind of amazed me is when I go back and look at my biggest winners, KGC, TFPM, again, to beat the dead horse on those, AXTI, possibly, could be one of our big winners too. They were all Landry Light pullbacks. They might have been if you look at the services, you're like, well, Dave, it says a TKO, it says pullback. Well, it's like, yeah, but it was also those patterns too. So sometimes you'll get several patterns setting up, but most all of the setups that I have taken were Landry Light pullbacks, and those that weren't with a 30 EMA were with like a 20 EMA, which I used to use instead of the 30, by the way. Anyway, there's all the parameters down below. Let's just take a look at that on chart. Entry, stop, and the IPT is up here. Now, this one you can see hit the initial profit target, okay? And we banked 1,000, and now we have 1162 open. And that's going to be a little bit less, but we have a stop in place just in case. Hey, might write that down. Have a stop in place just in case. This was a former mystery chart, so we'll do a little follow-up. Big blue arrow, nice little pullback to, you guessed it, a 30-day EMA. It amazes me. It's simplicity. What's the quotes there? Is the ultimate sophistication. That's a little esoteric. But the one I like was a guy named Rolf. I think it's the seeing what other people don't, or something like that. I have the book handy, but anyway, it's a good book by Rolf, R-O-L-F, and he said that simplicity is the zenith of a long, arduous journey. Okay, so it's like simplicity is not the beginning of the journey. Okay. It's after you tried every indicator in the world, and then you settle upon something simple. And again, getting back to the article that I wrote for this Spanish magazine, is all you need is one power to be successful, okay? And that's what Linda Raschke once said. So I really harped the importance of simplicity. And if gun to my head, which my wife doesn't like me saying, I guess because I'm a trader or whatever. Like some days when it's really shitty, you know. The problem is I try not to tell her the ups and downs too much, but she can look at my face. She'll look at my, like sometimes I walk in the house, she'll like, do I need to hide the guns? I'm like, no, it's okay. It's okay. Anyway, keep it simple. All you need is one power to be successful. Yada, yada, yada. All these things I preach every day. Anyway, nice little pullback to the moving average. We went a little below it, but that's okay. Our entry's above it. Okay. Stop us down here. Initial profit target up here. And let's see what happens. Okay. Not much. Okay. Are we back under water? I think we're barely above water on this one. So it hasn't anything wrong just yet. It hasn't anything right, but it's kind of hanging in there. So what should we do? Dave, it's dead money. No, it's not. Let's see what happens. Here's another one. This is not a mystery chart again because it triggered intraleak. This is a TKO, but as I said a second ago, the 20 EMA would probably be a little bit higher. So it would be a Landry Light pullback on a 20 EMA. Okay. I wouldn't go below that, but 20 EMA is the shortest moving average I would use for that. Because I know you can say, well, put it at 10 moving average. And it's like, okay, well, I like at least a 20-day for this type of analysis. The bow ties, for instance, you have a 10, a 20, and a 30, 20 and 30 exponential. And the 10 is simple. And then for the VIX analysis, using the 10 simple. But anyway, nice little TKO move. The other thing too, notice this little peak here followed by a slightly higher peak with at least 3 to 4 days in between. That's what I call a double top knockout. So the market makes this minor double top, and all the eager shorts get excited, okay? And maybe some of the nervous Nellies that just bought the stock, when that knockout move comes, it shakes out the nervous Nellies and it sucks in the eager shorts, and the predicament of those traders could actually help you out. So technical analysis is reading the mind of the market through the charts, okay? Reading the psychology of the market through the charts, and then figuring out a way to take advantage of that situation. So there's your TKO move. There's the parameters, entry, stop, and initial profit target. Hate to use the word hope, which you should never use in trading, but hopefully we'll be talking about this one for a long time to come. 316 open when I grab this snapshot, and we'll see where it is today. That's up a smidge, better than poking here. All right, just real quick, the Landry 100, it's a list of stocks. I have a complete article on this, on how I pick them. And it's picking them is somewhat mechanical. I'm looking for a new 52-week closing high, and I'm sorting those by volatility, and I'm picking the higher volatile ones first. Now, if we get into, God forbid, a continued choppy market, or even worse, a bear market, then there's going to be fewer stocks to pick from. So I might lower those parameters a little bit and maybe look for like a 90-day high or even a 60-day high. But for now, I'm finding plenty of candidates for this. So speculation is alive and well. This is kind of the strangest market I've seen in a while. Usually when you start seeing areas deteriorate, like finance and banks included in that, and a broker-dealer and software, and some of these other areas, you start seeing them weaken and begin to implode and end up in bona fide downtrends. Usually other areas follow suit, okay? But lately, as I've been saying quite a bit in the market in a minute, it's been a tale of two markets where you have this weakness, but you also have plenty of strength left. So the point I'm getting to here is, even though I'm kicking a lot of stocks out of this list, I'm able to find enough stocks to replace them. And by the way, again, short term versus longer term. So here's a gold and silver stock, right? It's up 1,200%, and it's been in the Landry 100 since April, okay? And then I went, right before I went live, I looked at the list, and we have some from January of 2025, okay? So those stocks have been in here for a year and change. So the idea is ride your winners and cut your losses. It's a great exercise, if I say so myself, and I'd encourage you to do the same. Manage a momentum list like this. And this is a feeding ground for a lot of stocks too. Look, AXTI right there, okay? We're long that one. TFPM right there, AG right there. I'm just doing this on the fly. What else are we long, okay? So it shows you that it could be a feeding ground for stocks. It shows you where the money's flowing. It's just a wonderful thing, if I say so myself. All right, let's go ahead and wrap these resolutions up this week. I forget every year, how long it takes to go through these, because a lot of them are related, and a lot of them I find myself saying the same thing in different ways. But I think they're very important. Now, this one's kind of cheating on this one, but I mentioned it last year. And one thing I was thinking about right before we went live is the resolutions are kind of like the million little things. It's like, I know as soon as I finish these 26 resolutions, I'm going to think of 26 more things that I wanted to talk about, right? Well, the million little things is where I flesh those things out. Now, I haven't added to it in a while, but I'm going to get back on that at some point this year as they come to me. And trading is really a million little things, okay? It's not like one big deal and okay, that's all I need to know, I got it. It's a million little things that you need to do. So I would encourage you to watch the series, but I would also encourage you to start your own, okay? And only you know what affects you. And I hate to tell the story again. I need some new stories. I need to get out. I need to start telling people I'm available to travel again, because every time I get out, I learn so much more, and I just have to do it. Anyway, where was I going with that? It'll come back to me. I lost my train of thought. Anyway, number 24, I will do a look back, a daily look back on my trading, okay? So the day's over, the dust settles, and you need to look back at what happened. Now, Linda Raskey a while back it was probably many years ago, but it was just posted to X not that long ago. She talked about a trade, and I forget his name, so I'd like to give him credit, but I forget his name. And the point is that at the end of the day, he and his team would get together, and he didn't say, did we make money today? Did we lose money today? He would say, how did we follow the system? How do we follow the process? So you need to analyze the process versus the profit. Now, if you do have a profit, make sure that it wasn't luck, okay? And as Annie Duke points out, we tend to attribute skill with luck, and we tend to attribute bad things with bad luck. And sometimes you just did something stupid, right? Anyway, analyze the process versus the profit. Now, you need to really look hard. Okay, were there any goads? Was there any FOMO or extraneous influences? A client friend of mine, he's really good as a day trader. He's more of a scalper, and he can go in and out a bunch of times. And it's like, if he tells me what he's doing or what he just did or whatever, I find myself trying to do the same thing, and guilty. Okay, I am guilty of trade goads, not as bad as I used to be, but recognizing that every day, okay, is very important. FOMO or something extraneous. There's always expenses, okay? We just got hit with a bunch of expenses. We'll probably get reimbursed, but the money's gone, right? For now, at least. Dealing with some issues with Marcy's parents and all. So, we're just kind of breaking out the checkbook or whatever. People still use checkbooks? Breaking out the credit card or debit card. Anyway, there's always going to be expenses. There's always going to be extraneous influences, right? We've been under a lot of pressure and stress with dealing with a lot of these issues, and it affects you, and you have to be cognizant of that, and you have to compartmentalize, okay? And by compartmentalize, you have to see something in a vacuum in and of itself, and you can't let all these extraneous influences, something that I preach constantly about, affect you. Now, the other thing is, in perfect hindsight, what could you have done better, okay? Now, you have to recognize the hindsight. There was a book called The Undoing Project, and basically, I think they were just kind of like just talking a lot about thinking fast and slow with Tversky and Kahneman. And The Undoing Project, to try to sum it up, it's like, let's say you take a different route to work one day and you get in a wreck. Now, that seems like, if had you not made a decision when you got in a wreck, well, you don't know that, okay? You might have gotten killed, in another wreck, or something else could have happened. So we have this propensity to try to un-F things. Like, what if we could un-F this, So you got to be careful with that. So what's perfect hindsight and what's not? And where I'm going with that is, what could you have done better? Is there any foresight in hindsight? And the example I use there is, have you ever, we're all guilty, okay, of this. Have you ever taken a trade and then get stopped out fairly quickly and say, I knew I shouldn't have taken that trade, okay? That's okay. Just don't keep doing that. So what foresight in hindsight would have been there, okay? What did you see then that really wasn't there? Seeing what's not there, okay? So you're thinking, oh, this looks like a great trade. And all of a sudden in hindsight, you're like, oh crap, that was not a good trade. There was no momentum and blah, 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 whatever. And the thing is, it's like all these lectures and all this speech. The bottom line is, once you've been trading for a little while, you know what you're doing wrong, okay? Just don't do that. I know, easier said than done. All right, number 25, I will review the 26 resolutions daily. Again, with anything, make it your own, but then make sure you're reviewing these things, and it's painful, but chances are, if you're in a rut, you could be violating some of these rules. All right, number 26, and this is the one I saved for last, and this is a biggie, okay? I have told almost everybody I know the wonderful, wonderful things that come out of doing your morning pages. I did these years ago. I called it a brain dump, and many years ago, like 20 something years ago, maybe 30. And I quit for whatever reason. You know, sometimes you get into something and then you lose interest, whatever. But I've been pretty solid with doing these for a while. And last time I looked, I think I had 4,000 pages of morning pages. And then that's just from when I went to digital. So before that, I've got notebooks. I got tons of notebooks around here with the morning pages. Now, the morning pages are 3 handwritten pages. Okay. When you first wake up, write 3 handwritten pages. And I've told, like I said, everybody and their brother to do these. So far, nobody's gotten back to me and said they're doing them. Okay. It will change your life. I can promise you that. It's hard, okay, to get started. Once you get started, it's easy. It's super easy. In fact, I know I sound like a nerd, but it's what gets me out of bed in the morning. Sometimes I get up like it's right before 5. Yeah, I think the alarm's set at 4:55, and I'll just lay there for a second, like, oh God. And I was like, well, I could get up and do my morning pages. I could do that. I could accomplish that. And I really look forward to doing it. And this is from a guy who was afraid of writing and hates writing, okay? Used to hate writing, at least. I used to quit, or what do you call it, when you drop. I used to drop classes in college if they had a term paper. I was so afraid to write. And eventually that caught up with me, and I had to write a term paper. And I remember the term paper I wrote was a piece of crap, and I just kept rewriting it and rewriting it. And I rewrote it probably 50 times, right? Every day up until the deadline. I turned it in. I'm like, boy, I'm in an F on this. I got an A+. And I was shocked. And I'm still didn't like, what the hell happened, you know? And I told a friend of mine who was a English major or writer or whatever, he goes, there's no good writers, there's rewriters. Okay. And that really helped me out a lot. Now keep in mind with these morning pages, nobody's going to see this, okay? It's only you. So don't worry about grammar. Don't worry about content. Just get the thoughts out of your head. And I'm going to give you some ideas on that in 1 second. The question is there a list of these 26 resolutions? Yeah, you know, if you go to my YouTube channel, youtube.com/Dave Landry, I have quick clips, and I take all of these smaller pieces of the video, like the resolutions and like the methodology in action and the million little things, and I put them into separate playlists, so you're not sitting here watching me ramble on and on for an hour and a half. Anyway, you want to stay analog, okay? Now, I have to admit, in more recent times, not all the time, but in more recent times, I have found myself checking in to see what the futures are doing and what my positions are doing overnight, okay? I try not to act upon that. I try not to look at the memes that my neighbor sent me overnight. If I could help it, I try to stay analog as much as possible. I think it's vitally important that we stay analog. Everybody's ADD now, right? I've been ADD forever. Undiagnosed, but I know I have it, right? Squirrel. You have to be really careful with this. And you know, I'm throwing my wife in the bus for a second, but I'll notice like sometimes she's watching TV, and if what she's watching she gets bored with, she'll pick up her phone and look at her phone. It's like this is a constant bombardment into our heads, and we're not wired for this. Evolution has not caught up. So I think that analog morning pages, it's a great way to warm your brain up and not inundate yourself with all this information early in the morning. Now, I talked about this book before. I haven't finished it. It's pretty good, I have to say. My issue with it, and my apologies to Mr. Quick, but I started listening to it on Audible, and it's one of those books where I'm gonna tell you what I'm gonna tell you, and then I'm gonna tell you what I'm gonna tell you. It's like, no, just tell me, okay? You know, maybe say I'm gonna tell you what I'm gonna tell you once, but don't keep saying you're gonna tell me, okay? I've already bought the book, okay? I'm already committed to the book. You don't have to sell me on it anymore. But other than that, I need to finish it because I don't want to make that too big of a negative for you. But this is a quote I've been looking for. Compared to the 15th century, we now consume as much data in a single day as an average person for the 1400s would have absorbed in an entire lifetime. one day versus an entire lifetime. Not so long ago, information moved more glacially through the word of mouth or a newspaper or a posted bulletin in a town square. Now we have so much access to information that it's taken a toll on our time and our quality of our life. We're kind of becoming junkies for this constant information, this constant excitement, that more and more things to it's taken more and more and more to get that dopamine hit, and we really have to be cognizant of that. And I think the morning pages are a major step in that direction. Backing off a little bit. Now I need to find some other quotes from Mr. Quick, some other statistics that is, at even going back like 20, 30, or 40 years, those numbers are still pretty staggering as far as the amount of information was available then that's available now. I mean, you think about, you've got your TV, you've got YouTube, you've got your X feed, Facebook feed, Substack. You know, Substack's good though, especially if you had Dave Landry, Substack.com. I think that's it. Anyway, let's talk a little bit about the definition and the benefits, okay? There's no rules, 3 pages, no rules. And it's hard. It is so hard to get started, but if you can make it through 6 weeks, that's going to change your life forever. I promise you, okay? And please let me know if you're watching this on YouTube. Let me know in the comments below, once I get the recording up, obviously, if you're doing them, and let me know how it goes for you. And it's really, really, really a good thing. Dave Keller is one person that he was doing them too, and the original morning pages. The word morning pages comes from Julia Cameron, and she wrote a book called The Artist's Way, and I think The Artist's Way for Business. I've only read about the first chapter or so of her book, The Artist's Way, but she talked a lot about the morning pages in there, so that's where that name came from. Again, I used to call it a brain dump. Morning pages. What app do you use? Haha. App start buying pencil lead again. Actually, you know what I'd recommend? This is my digital tablet. I absolutely love this thing. Okay, so it's still analog, right? But there's no internet. There's a backup to the internet, but there's no internet surfing on this. You're staying analog, even though it is kind of a digital product. But everything is handwritten in this book. Yeah, speaking of, pencils, right? I would buy refills by the case for pens, because I just got tired of buying pens and throwing them away. I felt like that was kind of a waste. So I started buying refills. I used to buy like every month to 6 weeks or so, I'd buy a complete refill. That's how much ink I was going through. So I really love the digital tablet, which eventually will pay for itself. It'll take a while in paper and pen. But yeah, this is pretty much a free thing to get started. I would urge you to do it. And the beauty of it is, especially when it comes to trading, and I'm getting a little ahead of myself, but you're going to flesh out a lot of issues and come up with a lot of ideas, by the way. Now, you want to write about your worries and concerns, okay? And my biggest early takeaway from restarting this project, if you want to call it that, is that remarkable. This is a remarkable too. There's a new color one. I don't see the need for that. I'm kind of have an affinity for pen and paper, because this is as close to an actual notebook as I've ever seen. It takes a little while to get used to writing on the screen, but after a while you get used to it, and it's fantastic. And I don't know if I can get you a discount on that, Randall, but shoot me an email just in case. I'll ask the company. When I first bought it, they were offering discounts to referrals, but anyway. But write about your worries and concerns, okay? And what shocked me, and this is a point I was trying to get to earlier, I didn't get there, ADD, I guess, is that only a small percentage of what you are worried about will come true. And what's amazing is, of that small percentage that does come true, you just deal with it, because there's nothing you could do. I saw a diagram on the internet the other day. It said, worried, and it's like, can you do something about it? Yes. Don't worry. No. don't worry. Now, I know it's not that simple, but by writing it out, you get it out of your head, and it's like later in the day, you're like, oh, I'm worried about this. Like, okay, I already wrote about that. That's in my notes or whatever. And it helps a lot. But again, it helps you to realize that a lot of what you worry about never comes true. And when it does, you deal with it. Now, this is a big one for me. I'll write about trading, okay, and quite a bit. Um, if I'm losing money day after day taking unnecessary day trades, I remember that, and then that's in my head in the morning because I'm thinking about it, right? And that's like, oh, you know what, Dave, you're becoming the definition of insanity. And I think, okay, wait a minute, but it was working so well. The 5 most dangerous words on Wall Street. It's like if I'm printing money, all of a sudden the wheels kind of come off the bus a little bit, and I start losing money or whatever. It helps me to recognize that conditions are changing. It just does all these different things. So if you come in your office, and I got tons of screens. I even got a big screen TV. It's just 1, 2, 3, 4. I got more than I can count. And each monitor is a double monitor. Probably don't need all that, right? But I want to look like a trader, I guess. Again, I'm getting inundated with all this information. Oh, let's futures coming undone. See, more information. Ugh, ugh. See, I'm emotional. But if you're feeling apathetic or too enthusiastic, both of those are dangerous. And it's like a couple of days ago, I'm like, boy, I'm really good at this. I've got it all figured out. And then what happens? Bam, you get whacked. As I tweeted out, right when you find the key to the markets, they change the lock, which is a Landry-ism. One thing I want to mention too with the morning pages, my brother-in-law, I told him about these, and back then he was studying to become a deacon. He's like, oh, okay, well, I need to do this writing I need to write this paper, so I'm gonna work on my papers. I'm like, no, that's not what it is. Okay, it's more of a brain dump type of thing. Now, if you come up with some ideas or something, by all means, write them down. I come up with a lot of content, and I'll write a little bit, okay, but I don't go in saying I'm gonna write about trading today. I'm gonna write about whatever. I just go in and do it. What about things that you can make your life better? I mean, I'm guilty of not doing this, but there's little things that you can do to make your life better, okay? Take care of something that needs to be taken care of or whatever. And so all these kind of things will come up during the day. And again, it's going to make your life so much better. And write about how you feel physically and mentally. Boy, I slept like shit last night. It's like, and guess what? You have a crappy day trading. Geez, I wonder why. It's like, well, that might have had something to do with it, okay? And trading is all about figuring out how all these extraneous influences that I talk about so much are affecting your trading, and they will, believe me. Now, when I was at my oldest daughter's graduation, there was a speech, or the lady gave a speech, I should say, and one of the things she said that struck a chord with me is she tells her staff, okay, when they have you always have problems in business, right? But she tells them, like, if you could wave a magic wand, what one problem would you fix? Okay. Now, you don't have a magic wand, obviously, but you'd be surprised. It's like, what problem can I fix? And if I could wave a magic wand, and you'd be surprised that you'll get your mind thinking about how can I solve this problem. If I could wave a magic wand, I'd say I wouldn't get stopped out today. Ugh, it's ugly, huh? Futures are down 90 points. All right, Crypto Corner. I doubt there's anything to do in crypto, but I'll go ahead and we'll go ahead and give it a shot. Any questions, anything thus far? Is there an app for morning pages? What app do I use for morning pages? That's funny. Okay, let me get this shared. One thing I tweeted out a while back, again, I said it a few minutes ago, it's always darkest right before it gets more dark. Let's see if we can get this to work. Oh, here we go. So taking a look at Bitcoin, now it's bouncing a little bit. I wouldn't get involved with this dead cat bounce. And some people say, Dave, stop saying that. It's like, well, it's a 200-year-old term. The cat lived a full life. He was already dead when he bounced, right? You know, it's not like you're throwing the cat and he dies. He's already dead, you know. He had a great life. He would do his business litter box and scratch around a little bit. Then he'd go climb on the kitchen table. As cats do. Anyway, I wouldn't rush out and buy Bitcoin just yet. It's getting whacked a little today. Obviously, the big blue arrow points lower. By the way, all asset classes will lose at least 50% of their value in your lifetime, okay? Where was Bitcoin? 126,000, okay? Where did it go down to? 60,000, right? That's half. It lost half of its value. In the gym, when the market gets whacked, the older guys are like, I'm not too worried. It always comes back. Well, it might take 25 years, and I don't know if you have 25 years, but you know, well, I don't know if I have 25 years. Who knows? You know, nobody knows that they have 25 years, right? And yeah, it often comes back, but not always. Okay, and you look at the longer-term S&P 500. There was a time where it took 25 years to come back, and you think, well, that was a long time ago, Dave. That's probably the depression. Well, it was, but it took 13 years to recover from the 2007, 2008 slide. Okay, so that's a pretty long time. Anyway, so Bitcoin not doing so hot, Ethereum not so hot either. These markets remain in pretty serious downtrends. When Bitcoin is blowing and going, sometimes you can come in here and trade the shit coins, SHYT, and pick up a little money. Like that looks kind of interesting. I should have been doing my homework. See, that looks pretty good. Little Landry pullback, that's taken off. So again, I violated one of my rules, so that's one I actually missed. It's the first one I think I've missed in a while. And I don't know if it's liquid enough or anything, but when the market, meaning Bitcoin, is doing really well, sometimes you can just come in here and play the relative strength game. Any pairs you guys want me to look at, I'd be happy to do that. If not, while we're waiting, I'm going to go ahead and shift gears and switch over to stocks. All right. Let's take a look at the P's. You know what? Let's get some bow ties in here. S&P 500, not quite a downtrend. Yeah, it is in downtrend, proper order. My mistake. So the 10 is less than 20, 20 is less than the 30. It's getting whacked pretty hard, down 1% in the third today. So the further it goes lower, the more important this overhead supply becomes, okay? Because anybody who bought in this range might be looking to get out at break even. And that's just human nature. There's no mumbo jumbo when it comes to my version of technical analysis. Let's take a look at the NASDAQ. You can see it's selling off fairly hard. This looks like a top for now, at least on the daily. Longer term, it still looks okay. It's just a bit of a pullback, double top knockout type of look, or double top pullback on the daily. Shorter term, not so much. 200-day moving average right here. I don't really pay a lot of attention to the 50 and the 200 until they don't really matter until it matters. Okay, so now I think it's important for that 200 to hold. One, because it's well watched. Two, it's like that's the recent low, and I think it could get ugly if we get below that. But hey, one day at a time. Again, it's been a crazy kind of mixed market where even though the indices are now becoming a little questionable, and a lot of sectors are becoming questionable, there's still momentum out there for now. Okay, check back often. Rusty's getting whacked. Look at that, 2.75%. You can see the bow tie moving averages come together. When you have a bow tie after all-time highs, that is, as we say down in Mexico, no bueno. Let's take a look at some other areas. Gold, the commodity, getting whacked a little today. It's been trying to rally out of this deep pullback, but it's having a rough time. Gold stocks were improving, and now they've sold off hard with today's action down to the 50 simple moving average. So we might start stopping out of some positions. I'm not happy about that, obviously, but hey, it comes with the territory. What did I just say? Now, the IBB, which is biotech, NASDAQ biotech, getting whacked pretty hard today down towards these recent lows. So that's kind of looking ugly there. Infrastructure getting whacked a little bit, but it still looks pretty good longer term. We might actually see some setups there fairly soon. Software remaining in a pretty serious downtrend so far, just pulling back. That's downright ugly. I try not to confuse the issue with facts, but I asked my peeps why software was going down. They said because there's an AI fear that's happening. Certain medical areas like medical devices not doing so hot. You can see selling off hard out of a kind of a bow tie first thrust type of thing. Defense had been doing really well. It's getting whacked today though, so that's kind of a bit concerning because we just made these all-time highs. Yesterday it looked a lot better than today, obviously, so we'll keep an eye on that situation. Transports have been doing fairly well as of late today, notwithstanding, but longer-term uptrend so far intact there. Getting back to the downside, financials looking kind of ugly. As you can see, in a downtrend, certainly look like they've topped out, so that's looking kind of ugly, a little choppy. Back to the upside, energies, not too bad. A nice longer-term uptrend remaining intact there. Oil service has been doing really well too. All service has been acting a lot more like momentum stocks, right? Look at this nice persistent move and look at this pullback. I can all but guarantee we will see some setups here tonight when I do my analysis, so stay tuned for that. Major drugs getting whacked today. Not the end of the world just yet. So far, it just looks like a deep pullback, but additional weakness would be of concern. Again, that 50 simple doesn't matter until it matters, and now is one of those times where it matters. Robotics and AI, same sort of pattern there down to the 50. Additional weakness would be of concern. Longer term, still in an uptrend, okay? So we'll see. Today could be a bit of an inflection point, so let's see how that all shakes out. Semiconductors, again, you can see they're kind of rolling over, a bit of a double top in here. Longer term, still looking pretty good, but shorter term, starting to look questionable. By the way, the other thing you probably want to pay attention to is the TFM 10% system, okay? And not enough time to get into that today, but I'll revisit it next week. But make sure you're plotting that, especially if you have Stock Charts ACP platform. And we're really not that far away from the all-time highs. So far, based on that system, we're okay. But as this weakness, if this weakness continues, then that could change really quickly. And that's a good little, somewhat longer term system to pay attention to, and that could help to keep you on the right side of the market. Okay, anything else you guys want me to look at? Any individual stocks? While we're in impasse, obviously I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule. Anything unanswered, dave@davelandry.com. Going once, going twice. Well, thanks again for attending. Hopefully I'll see all you guys and girls again next week. Everyone else, I think most everyone here, I should say, is in my Facebook group, so I'll see you guys in a few minutes. And everybody else, again, I hope to see you next week. And have a good weekend, and may the trend be with you. Thank you so much.